Hey everyone, welcome to TQQQ Labs. This is our first video of the week. We're going to break down everything that happened in the markets last week, what to watch for when the bell rings tonight, and the key events that will define this week. But stay until the end because there's something you need to know. This Friday, the U.S. Supreme Court is handing down its ruling on $133 billion in tariffs. This single decision could reshape the direction of markets for 2026. If you go into this week without understanding what's at stake, you're going to be caught off guard. Let me sum up last week in one phrase: the great money exodus. The S&P 500 dropped 1.39%, the Nasdaq fell 1.27%, and the Dow lost 1.23%. All three major indices sold off in unison. But to understand what this decline really means, you need to look at two other numbers side by side. During that same week, the gold ETF GLD climbed 157%, and the long-term Treasury ETF TLT surged 2.49%. Stocks are falling while gold and bonds are rising. Do you know what that combination signals? Money is running scared into safe havens. And here's the part that should really make you pay attention. Gold has now crossed $5,500 an ounce. That's a 100% gain in just 1 year. You can count on one hand the number of times in history gold has moved this fast. Trump's tariff war, the uncertainty surrounding the Fed chair transition, and central banks around the world moving away from the dollar. All three forces are working simultaneously to push gold into historic territory. When gold rallies like this while stocks are falling, yes, the sell-off is driven by fear. But the reason gold is rising is rate cut expectations and a weakening dollar. And rate cuts plus a weak dollar are rocket fuel for the Nasdaq. Once you understand that paradox, the current situation looks very different. You need to pay attention to what Warren Buffett is doing. Berkshire Hathaway's cash position is approaching $400 billion. That's over 30% of total assets sitting in cash, the highest level in 30 years. In the late 1990s, right before the dot-com bubble burst, Buffett did exactly the same thing. While everyone was chasing tech stocks, he quietly stockpiled cash. When the bubble popped, he used that cash to make historic purchases. Most investors see Buffett's cash hoarding and get nervous. But I see it differently. This isn't a signal of fear. It's a signal of conviction that opportunity is coming. Because crashes are what create buying opportunities. When the market crumbles, the person holding cash becomes the winner. Our algorithm is built on exactly this principle. Let me highlight the most shocking stock of last week: Apple. Down 7.95% in a single week. And they had just reported a blockbuster quarter, revenue of $143.8 billion, up 16% year over year with iPhone sales surging 23%. The best report card in the company's history, and the stock got crushed. 3 reasons. The Siri AI update got pushed back past May. The FTC launched an investigation into Apple News bias, and rising memory prices triggered supply cost concerns. There's a brutal market lesson here. The market doesn't pay for past performance, it pays for future stories. Apple's earnings were flawless, but the moment a crack appeared in the AI narrative, the market punished it without mercy. Meanwhile, that same week, the semiconductor ETF SOX gained 1.76%, and AMD continued its 83% monthly surge. Money is flowing to where the AI hardware story is still alive. Reading the news and reading the flow of money are two completely different skills. There was a post on Reddit's Wall Street Bets that went viral this week. One user wrote, "Holding TQQQ makes every day feel like a month. You're rich on Monday and broke by Friday." Someone replied, "That's why I don't check my account every morning. I let the algorithm handle it." That reply hits the nail on the head. TQQQ dropped 19% last week. When QQQ falls 127%, TQQQ amplifies that 3 times over. A decline like that in a single week is enough to shake anyone emotionally. But in our 10-year backtest, short-term drops like this showed up dozens of times, and while past results never guarantee the future, the system maintained a CAGR of 60.3% for those who stayed the course. That crushes the 38.3% CAGR of simply holding TQQQ over the same period. The gap between the person who panic sold on emotion and the person who trusted the system and held firm, that's where it all diverges. Now let's look ahead to this week. 2 events are going to dominate the market. First, Tuesday evening at 2 p.m. Eastern, the FOMC meeting minutes will be released. These are the records from the January 28th meeting. The Fed held rates at 3.5% to 3.75%, but internally there was serious division. The inflation hawks and the employment slowdown camp were at a stalemate. The moment the minutes reveal which side had the louder voice, the market will react instantly. Right now, the market is pricing in virtually zero chance of a rate cut before June. Fed Chair Powell steps down in May. Depending on who replaces him, the entire rate path for the second half of the year could flip completely. This uncertainty is the main culprit behind VIX sitting at 21. Second, Friday. This is the real big event of the week. The Supreme Court will rule on the constitutionality of IEEPA tariffs. The entire tariff regime that Trump imposed under the International Emergency Economic Powers Act is on trial. The total tariffs collected so far are $133 billion. If ruled unconstitutional, a significant portion of that money would need to be refunded to businesses. During oral arguments back in November, a majority of the justices reportedly expressed skepticism. If the tariffs are struck down, trade-sensitive stocks could spike in the short term. But there's also a strong chance the Trump administration would immediately impose new tariffs under a different legal authority. The key point is that a conclusion is coming. Markets hate uncertainty more than bad news. Whatever direction the ruling goes, the resolution itself could trigger a relief rally. Let me quickly run through the earnings calendar. Tonight, Palo Alto Networks reports earnings, expected revenue of $2.58 billion, up 14.4% year over year. They've beaten market expectations every quarter for 2 straight years, riding the explosion in cybersecurity demand in the AI era. Constellation Energy also reports tonight. The stock surged over 10% last week alone, powered by 20-year nuclear power supply contracts with Microsoft and Meta. They're at the center of the nuclear renaissance, driven by skyrocketing power demand from AI data centers. Wednesday brings earnings from Booking Holdings, DoorDash, and eBay. Jim Cramer recently said to buy cybersecurity stocks, and on Wall Street, a Cramer buy recommendation is practically treated as a contrarian indicator. But this time, the structural trend of AI security makes it hard to just laugh it off. Today is President's Day, so markets are closed. They reopen tonight. Here's where the key indicators stand right now. The Fear and Greed Index is at 36, firmly in fear territory. QQQ's RSI is at 36.6, approaching oversold. QQQ is sitting 374% above its 200-day moving average. As long as it holds above that line, the long-term uptrend remains intact. The 10-year Treasury yield is at 4.06%, down 3.57% for the week. Money is flowing into bonds, which is evidence the market is pricing in rate cuts. The dollar index is at 97.1, down 134% year-to-date. A weaker dollar means expanding global liquidity, and that's a tailwind for the Nasdaq. Howard Marks once said, "The best buying opportunities come when everyone else is too scared to buy." The problem is, in that moment, you're scared too. That's exactly where we are right now. Fear and Greed at 36, VIX at 21, all 3 major indices down for the week. Every sentiment indicator is pointing to fear. But our system doesn't move on emotion. It only follows the rules. And right now, the data is clear. The long-term trend holds. The rate decline trend holds. Supreme Court uncertainty is about to be resolved. Scared money is selling. We're standing on the other side. Let me wrap it up. Last week's decline was the great money exodus. Gold broke through $5,500 and Treasuries rallied while stocks fell. But this wasn't panic. It was asset reallocation. This week, the FOMC minutes on Wednesday and the Supreme Court tariff ruling on Friday. These 2 events will set the tone for the rest of February. The Friday ruling on $133 billion in tariffs could be the most significant legal event of the year. Tomorrow, I'll be back with the post-close analysis and earnings reviews for Palo Alto Networks and Constellation Energy. If you've watched this far, you're already more prepared for this week than most investors out there. Subscribe and hit the bell so you don't miss Friday's Supreme Court ruling breakdown. Another week, another chance to stay disciplined and stay the course. This has been TQQQ Labs.